Okay, good. So I gotta behave, I guess. We are live. I think we opened it up ahead of FOMC. We had the interest rate decision in 7 minutes, less than 7 minutes, and we do have the FOMC presser with Mr. Jerome Powell, 2:30. So after the interest rate decision, we'll wait for Powell, and then we'll sit in and listen in to the press conference, see what color tie he has. We'll
Exactly.
make trade decisions off of that, right? Uh, no. So, anyways, welcome everybody. We've been taking it easy here, waiting for this FOMC rate decision. Just looking at the daily SPX, holding up pretty okay here. Still above the 9-day moving average and a beautiful upside trend. So, technically speaking, uh, we're not even too extended off the 9. So, for now, we're holding um, in a really nice range near all-time highs. We have the profiles stacked here very nicely, so we're in balance here, which is fine. Let's see what happens. I don't think I know. I definitely know that I don't know, and I really don't care what Powell says.
Yeah.
Um, technically speaking, I just want to make sure that we can kind of, you know, make good trade decisions depending on which way the price goes. There's always, for me, I I sometimes trade FOMC. I would say I've traded FOMC a little, like more than not, but I need to have some sort of trade plan in place for me to do it. So there's always, the idea of just sitting things out is totally fine as well. But Tay, what are you looking for as we have like 5 minutes to go here? Is there anything like specific that you're looking for in SPX, or anything else?
Yeah. Yeah. Not a whole lot. I think what's interesting is a big condor got put on here in the session. So that could keep us contained. It's quite interesting how it lines up with the technicals really well. So the 63, 70, 63, 60 area, S&P has been very supportive. We have some negative gamma below. We could see a bit of volatility into that, but the positioning lines up with the technicals really well there. So basically looking at support at 63.65 on the low side. If that breaks, 63.30 would be the target. If we hold here, start to push higher, we've got some resistance at 6400 and then 6420 above that. So watching, we're right smack dab in the middle pretty much, and I am in more of a wait and see kind of mode here. So
Yeah, and that 65 aligns nicely with this week's lows, pretty much. Definitely like yesterday's lows, which is weekly lows as well.
exactly.
Um, and so, just for people who don't know, like when there's an IC there, is that basically a sign that we could be contained within a certain range until that is taken off or whatever, or like how do you read that?
Yeah, yeah. Typically, I mean, it's somebody betting that the market stays between pretty much 63.30, 64.20. So it's a 100 point range really. Now,
Yeah.
what gets interesting is if either side ends up getting taken out, you can see a rush to kind of update the positioning, and then, you know, uh, in both directions, if that were to be the case, there's a lot of negative gamma, which simply just means that there's expected more to be more volatility if you're on either side of those ranges. So the bet is that we stay in between, but there are cases where that doesn't happen, and you start to take out one side of the leg, and then things can ramp pretty quickly, which we have seen before. So uh, we have to wait and see, but that's kind of what we're looking at.
Just because we have 3 minutes to go here, couple upside candidates for me, at least Nvidia is one of them. I'm really liking this 180 area. If we start breaking, I think we could extend further. I think this one has been trading in a nice range where dips have been bought. Nvidia, I'm watching. Also, just noticing nice relative strength in semiconductors, just in general. Um, and as far as a downside candidate, I really don't have any for now. I think I'd rather trade SPX downside if that happens, if there's a clear trend. But I think the way to look at things is like if if a stock is acting strongly, so Nvidia has just been holding really strongly all day, there's a clear level to trade against, which is this 180 all-time high breakout. Let's say SPX does move higher, like they're gonna more likely than not, bid up Nvidia as well. So it could be a nice little vehicle to trade upside on. So that's what I'm watching here, but obviously open to anything here. But Nvidia I've been watching closely. Also, Google is interesting above this 197.70, 198. Had a really nice day today, and I think there's quite some room to go here to fill the gap above on the daily. The daily looks like this. You can see this gray box is just basically this gap that we left behind over here, and we're now starting to trade into it above 198, which is the high from the other day when we gapped up on earnings. If we could break that, I think we see a real nice quick move higher. And this is just kind of if the market allows us, right? If SPX pushes higher and there's a clear trend, I think they're going to bid these up. Just caveat is that we do have big tech earnings, right? So that might set a little bit of breaks on these kind of names. But Nvidia, I think I like a lot actually for an upside move.
Yeah,
Is there anything that you're watching?
Yeah, I'm with you on Simmies and Google as kind of a secondary. I'm very aligned with you
5 seconds
there.
to go.
Yep, and then Netflix downside.
Good one. Okay, rates unchanged. Bauman and Waller dissented in favor of a cut. So no surprises there. We knew that it would leave the rates unchanged here. But now it's all about the price action. So far, nothing extreme. We're just basically near high day here, pinned. Google's making that nice little double candle higher here. Nvidia's near 179.50, 180 here. So pretty expected here, but and likely priced in to a certain extent. And so I guess what will matter here is what Powell says during the presser, which is why I always say that is more important than the rate decision. Like in most cases, sometimes obviously the decision is important, also especially if it's a surprise. But considering this is not a surprise, let's see what the market does with this. BE trading into that 38. We've been talking about this BE today. Matei, you went over BE, that 35, I think 60 area for a long today. We didn't catch it because you were busy trading something else, but this was a really nice breakout here. Nice little continuation on the gap up, and just beautiful chart as of late. Just larger time frame, beautiful move here. BE, yeah. Some resistance at 38 here though.
Yeah, BE, fantastic example of like a 5-bar trail type of trade. High and tight consolidation following the breakout. The added variable of elevated short float, which is very good for those kind of breakouts with tighter trails. So that break over 35.54, you can literally get really good size because you can just trail the prior bar. A true breakout's going to go right away and not look back. And this is, for the most part, just trended higher the entire day. So very clean.
SPX popped above high day around 63.90, now reversing back down within the range. Tesla noticeably relatively weak here, trading near the lows. We did mention Netflix earlier. It's still kind of holding up here nicely. So Tesla for me feels like perhaps a downside candidate of sorts, but I also know that there's a lot of support around this area here. So we'll watch it very closely here. NVIDIA, although it is pulling off the highs here, still holding really nicely near the highs, with SPX pulling back. So just further kind of proof of relative strength here. Bigger candle in IWM. Obviously, IWM is a very rate sensitive, growth focused index or ETF, and so a no rate cut affects that one more than anything else really, or not anything else, but most things that we watch. So IWM is a really good kind of watch when it comes to those kind of things. QQ is a little bit less sensitive to those things, as you have a lot more mature companies with a lot more money basically. They don't have to borrow money the same way. And so with that, if IWM starts reversing here after this this drop and starts pushing higher day, then it's like, okay, maybe it wasn't priced in enough. Okay, market is fine with this. Let's watch some of these growthy names and see what if there's something there for us. Actually, I want to take a second look at Bitcoin here. All right, Bitcoin's trading in a bull flag on the daily. Beautiful bull flag after breaking out of a bull flag and then breaking out of another bull flag, a larger time frame. So it's just how Bitcoin moves. So my expectation of Bitcoin is to move higher, as we're still in an upside trend. The flag can go on for longer than we think. So we just have to wait and see. But this one traded for a few weeks, maybe a month and a half or so, and then broke out into new all-time highs. So let's see. I'm watching 120. I think I'm watching 120. Not to trade Bitcoin proper, but look at some of the other Bitcoin sensitive names here. Speaking of, I want to take a look at MSTR. It was doing really well today. Moved above 400. Trying to make a turn here on the daily off the 50-day moving average. So first kind of good candle here. And if you can close near your highs, that would be something like a character change of sorts, as we've attempted in the past to bounce, and they sold it. And so kind of ugly, very ugly candles here, even though it's a green candle, it's a ugly one. But if you can close something like this, then we can watch for continuation tomorrow for further bounce higher. NVIDIA snapped back right to the top here. So NVIDIA's still acting strongly here. I'm not saying we're going to get a move here before Powell, but I think it's still something that aligns very nicely with that theory that we had earlier, that thesis.
I'm watching UNH again, by the way, so I'm actually considering a swing, risking today's lows at 258. I'm watching the January 300 calls. We want to see it get back through like 264, 265.
Yeah, NVIDIA making a move now, testing previous PM highs here. Also, obviously, all-time highs here. So NVIDIA's looking real strong, guys. First, scalp through those PM highs. 180 calls could work. As we're getting close to the end of the week here, 180 calls could start moving here. Really nice dip and rip on that news. Showing relative strength, though. 180s for a scalp maybe could work. I'm just kind of hanging tight here, but definitely acting well. And also, I like that it's a semi that's strong. I always like semis being strong. As we're trading here, it just shows me that there's some nice support. So this one's looking good. Yeah, UNH looking good here, moving towards that 264, 265, above 265. I'm expecting 268.
Google defending that 197 very nicely.
Bit of a fast move here, FCX lower here.
Yeah, really fast move. Looking for the news. Shares of copper stocks are trading lower after President Trump signed a proclamation imposing universal 50% tariffs on imports of semi-finished copper products and copper-intensive derivative products, effective August 1st. That was the headline a couple minutes ago.
Yeah, FCX close to losing this 200-day moving average.
Yeah, good call on that. 40.53. Really nice follow through here on FCX. That 200-day stays below. Nice scalp risking prior bars. Mostly shares trade. Clean up that chart there.
Big level here, FCX. We're losing the 200, but 39 and 85 here. Big bounce area. If not, this one could move further.
Yeah. I'm short shares. I'm just scalping this while we're talking. Sorry for
Okay.
being quiet.
Focus on that. A bit of a chase here, but options, they're not really moving well at all.
Yeah,
So
it's probably just hands off our
yeah,
options. I like that
yeah,
check back to
exactly.
40.53, knowing the 200 days there. That
Mhm.
was a very nice spot to add because it's very simple. It either works aggressively there or it just quickly pops, right? So you can
Right.
use that as a framework for the trade. See if this can flush here. So on FCX is 2-bar trailing this, a little bit of a chase into that 200 day, and then using 2-bar trail method as a way to kind of ride it lower until it wants to find a bit of a support. Right now that aligns with that 200 day, so it could be quick. What was the level that you said you had? I have a 39.10 just from Legacy.
39.85.
85? Okay.
Yeah.
Cool.
When you say 2-bar, what time frame is it?
2-minute candle.
Okay. PDD, US ends duty free, DE minimus for low value shipments. Just a headline. Moved lower.
$15 minutes to Powell.
Keep holding NVIDIA back here a little bit. We have about 14 minutes here. FCX still below the 200 day.
Yep.
UNH looking strong here, guys.
Yeah, looks great. There we go, FCX. A little pause. A little bit of a rest without trailing. See if we can flush to new lows.
PNW making a nice turn here. We bought it up a little bit. Still below the 200 day at 188, so 2 points up. It does have earnings coming up. Not next week, but in a couple weeks, end of August. So let's see if they buy this one up. Okay, low, kind of in a range here, just watching across the board here. Okay, low is in a range, looking really good, though. They keep buying that dip. MSTR holding firmly above 400 still. And Hood, as we have earnings, Hood is trading right below 107 here.
Oh yeah, good eye on Oakland. It's been a harder trade, I think, but
Yeah.
looks really good. Alright guys, I'm trailing these UNH 250s getting trailed here, and I'm considering that swing I was talking about.
Yeah, UNH is coming back. My target above 264.50 here, or PM highs 265 flat. Expecting this one to move into yesterday's POC around 267.33, where we have some resistance. Above that, I think we can see a larger move. Um, but that is like a good target to have today, actually, if we can enter this 265 area. Oklo, I really like that daily chart. Looks good. Vertical intraday here as well. Tesla moving lower here, breaking low a day at 316 here. Very, very, very important area to hold. All right. Time check, 9 minutes here. The market hasn't done much here. Popped and then dropped 7 points or so. Guys, OKLO is running here, okay? Really running intraday. Really liking this momentum. A little uptick in volume too, trying to break out of the balance.
Plus one
Look at
ATR on
NNE.
Oklo is 76.86, so we just popped through that.
Okay.
Volume at 1.17, so solid volume, nothing crazy, but this will be interesting to see how it reacts at ATR here. 77 is also these highs, around these highs.
Yeah, it's a nice bid in this group. So CEG is near all-time highs as well. Fantastic day today. SMR also bit, nice bid higher, up 6% today, near the highs as well. So there's nice price action going on here. I mean, obviously BE too.
Yeah.
Seeing this Oklo breaking highs here almost.
Yep.
78 yesterday's highs. 7860 was PM high from 2 days ago. And if that breaks, we'll see that big move.
Yep. I just got trailed FCX. All out. Nice little win. Small scalp. Just back testing that 200A, so could set up again if that rejects.
Checking back to the 200 here.
Yeah. Big rejection on FCX there. I'm going to try to re-short with tight stop at 40.61. Last attempt here. See if I can get some follow through. All right, 5 minutes to Powell.
Somebody's calling out Avgo breaking back above 300 here at 302. 76 trading new all-time highs.
Oh wow. Yeah, semis have quite a look, huh? AMD's back.
Yeah.
Nvidia strong.
I mean, AMD's trading around 180 here. Another dip bought.
This move on FCX, for those that are watching this while we wait for Powell here, you want to see this stuff at the 200A. Even though the 2-bar trailed out, it quickly got stuffed at that 200. For a 4 follow through, you'd want to see these lows get run very quickly. If not, it has a higher chance of spraying higher, and you just want to be flat and sit on hands. So that's what I'm looking. There's a nice break. We're testing low of day.
Yeah, that check back was a nice secondary entry on check back. Backed us at 200.
Yep.
Pretty clear stop. Yeah.
Yep, exactly. Taking some partials here. As I want to see if we can get down to 39.10. Low of day test right now, so let's see. So I want to see if that can crack. New low date print not accelerating yet. There we go. Let's try to hold that spot. Being mindful of that 3980 you called out, Space Monkey.
Mhm.
Maybe it gets sticky here. Let's see. There we go. Come on. Yeah, I know SBX is not doing much, but I do find it interesting. I've got a trend line from the weekly going back like 2 years, and it's been super interesting to watch over the last couple sessions. We've had like it respect that spot really, really well. It's just kind of interesting because it's a very big time frame trend line, and it's like the upper part of the range that we're just kind of pinned to. It lines up with that like 80 area. A little bit of a trap there on FCX low of day. All right, Powell's should be speaking.
Support of our goals, today the Federal decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are
Guys,
little
I
changed
just took a
from the beginning of the
265
year,
call
although the underlying
UNH.
has shifted.
Nice.
Services inflation has continued
I'm
to
watching
ease,
that 300 call
while
for a
increased
swing as
tariffs
well.
are pushing up prices in some categories of goods. Near-term measures of inflation
Right
expectations
here,
have moved up on
move to
balance,
267, 268.
both market-based and survey-based measures. Beyond the next year or so, however,
Stop is fairly
most measures of longer-term
tight.
expectations remain consistent with our
250
2%
maybe,
inflation.
depending on what happens here on the price section.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Creating a
At
little
today's
wonky
meeting,
here.
the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to
Okay.
continue reducing
PLTR
the
pop in
size of our
here.
balance sheet.
We're getting a pop in the
Big
overall
pop, SPX.
market.
Continue to determine the appropriate stance of monetary
Straight into
policy based on the
63.95.
incoming data,
Friday
the
highs here.
evolving outlook, and the balance
So
of
that's
risks.
your tag. That was my target pretty much all
Changes
day.
to government need to evolve, and their effects
If you can
on
break
the
above
economy
Friday
remain
highs, I think we can
uncertain.
see a nice little weekly
Higher
continuation
tariffs have begun to show through more clearly to
playing on
prices of some
SPX.
goods.
Okay,
but their
lows
overall
near
effects
all-time
on
highs here,
economic
trading
activity and
just
inflation
vertically.
remain to be seen.
78. Just
A
mentioning it.
reasonable base case is
So I
that the
am
effects on
entering
inflation will be
those
short-lived.
UNH January 300 calls. Let's stop at today's low at 258.
It's possible that the inflationary effects could instead be more persistent, and that is a
You
risk
never
to
know,
be assessed and managed.
with FOMC, but the gamma setup is set up for a magnet move towards 64.20 potentially into the close.
Thank you, Jeremiah. Yeah, I see that. That's the top part of the condor.
Our current
Yep, that's
policy
the top of the
stance is
condor.
appropriate to guard against
So as long as
inflation risks.
above 63.70, it does favor trending higher into the close, into the
Nice.
top of the condor.
Yep, good call.
Balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on
Here's new
potential
highs here.
revisions to our statement on
PLTR
longer-run
near
goals
highs
and
as well.
monetary policy
160
strategy,
would be your magnet
and are
move.
on track to wrap
Video
up
180.
any
Keep an eye on that
modifications by
180.
late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
SPX
Our
testing Friday
success in
highs here.
delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Is Netflix popping up?
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
Powell in the Q&A now.
You know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate.
We're getting that
That
familiar,
said,
like
there's some downside
FOMC,
risk to
you know,
the
algo
labor market.
kind of
In coming months, we'll receive a
twitchy
good amount of
price
data
action here.
that
So
will help inform our assessment of the balance of risks and the appropriate setting of the federal
yeah,
funds
so
rate.
clear rejection on Friday
Just,
high
by coming
here.
months, does that include the possibility you'll be getting essentially
Pretty
2
much
rounds
exactly
of
like a
jobs
pop above and then
inflation
reversal. That's a
data
nice
between
short,
now and the
technically
September
speaking.
meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right, we do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data. before
Spot
the time of the
testing
September meeting.
650.
We have made no decisions
Nice
about
little
September. We don't
area
do
there,
that
guys.
in
Watch
advance.
for
We'll be taking that information into
a bit of
consideration.
a failed
all the
breakdown
other
of
information
sorts
we get as we make our decision at the September meeting.
for a push towards 677.
Thank you, Mr. Chairman. You took out the word, or the
FTX new lows.
uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting,
Taking some
uncertainty
partials FCX into this flush.
had moved down a little bit, but it was
Targeting
more or less even
39.10.
this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question
There we go.
is, say again.
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Hi, Mr. Chairman.
Yeah,
Neil
clear
Axios.
failed
This morning
push
we got a
above that
GDP report
396.
in which, final domestic private purchases
And
decelerated,
there's a
slowest
trend
pace since
line
22.
that goes from
There was a
yesterday's lows
weakness
to
in the
today's
interest-sensitive
lows.
sectors and residential
If you
investment
draw a
and commercial
line,
structures.
you guys
Are
can
those
see
not
it
signs
here
that
in my
monetary
chart.
policy is a little too restrictive right now?
We're
given
testing
current
that
economic
right
conditions?
this second.
So the
So hugely
GDP
important
and
intraday
PDFP
trend line here.
numbers, came in
75
pretty
is
much
path of least
right where
resistance
we
here, and
expected them
also
to come in.
support.
You got to look at the whole picture. So
FCX.
certainly, as I mentioned in my opening remarks, economic
Yep,
activity
75
GDP,
on
private
SPX. So
domestic final
on the
purchases,
other side of it,
those
if
can
70
narrow,
to
but
75
better signal,
fails, you can see a
for
pretty quick
future.
move, negative gamma and suppressive charm below 70.
0.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings,
Yeah,
and
so
on the
it's
unemployment
breaking.
rate. They're
It's
all
breaking this
very
trend line
light.
we just talked about, and it's funny how things kind of line up, gamma, trend lines, and things like that. But it's starting to break down here. The trend from yesterday's lows, today's lows.
Both demand
Let's
and
see.
supply for
Nvidia still
workers
fairly strong near the
has
highs
come
here.
down at the
AMD
same
holding
pace,
as
so
well.
that's why the unemployment rate has
Semiconductors
remained
look
roughly-
good.
roughly stable,
Switching
which
over
is why I
to
said
like
we do see
Microsoft, just
downside
because they have
risk in the labor
earnings holding near lows. Just been very tired all day long. Not a whole lot to do there. Netflix near highs, and this 1180 I think was like last week's Friday area that we were watching, that we popped very fast through this Monday. And saw rejection of that 1200 area. So still in the range here.
On labor, given the fluid labor supply situation, is there a number for this job?
Getting a
growth
reaction
Friday
right
that
at 75
look to you
SPX.
like equilibrium job growth?
The main number you have to look at now is the
Yeah,
unemployment
that's
rate, because
Nvidia, watch Nvidia here back above the
demand
PM
for
high from
workers
yesterday.
let's call it
Nvidia
just
looking
payroll
pretty
jobs,
strong,
that
as I
number
said
has come down,
earlier.
but so has the break-even number, kind of in tandem. So as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in
Nvidia 182.50 is
supply
trading around
and demand, I think
115. Could be something to watch if you start pushing higher and break a 180.
We'll be watching that carefully.
Those are going to pay. It's clear momentum in that one. Also in tandem with AMD looking pretty good here near highs as well, and Avgo and some of the other names here. Even SMCI is just holding nicely. SMH near highs as well, so that one is looking really
as of the
good.
June forecast, we're in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So they just saved that trend line
So
that we
on-
just
on the dissents,
posted
what
or
you-
talked
what you
about.
want,
They
from
just
everybody,
dipped it below,
and also
recovered,
from
bounced
the
off that
center, is
75
a
support that you
clear
guys mentioned.
explanation of what your
And
thinking is
let's see
and
if
what are
that's
the arguments
what we
you're
call
making, and
dip
that's we had
fuel.
that today. So I think
That's
basically
gonna
this was
allow
quite
us
a good meeting
the liquidity to
all
push
around
higher.
the table where,
And if not,
people were,
that's a sign too.
thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't...
Just posted a trade idea, guys.
That's what
the
it says,
commentary.
and that may well... I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring...
Nice handlebar,
all the
10-minute
incoming
chart
data
here
and
in
asking ourselves
SPX.
whether the federal funds
Dip
rate is
below,
in the right place.
hold and
And
go.
just on the point about policy being
Need
only
to
modestly
break.
restrictive,
For me, is
does that mean
obviously
that
it's
there's actually
400,
not much scope
but
to reduce?
just very, very kind of pensive action here. Just doing very little here. Hard to trade
Estimate
SPX
is
for now.
modestly restrictive. And
UNH pushing
there are
okay.
a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be, at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be the way the economy reacts over time to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers are
Like above 1180 could be a nice move back to high of week.
We expect to see more of
FCX new lows.
and we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly.
UNH new highs.
So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through.
SPX still on negative gamma here. Expect more volatile price action. Under 75 opens up a lot of downside.
I don't think
60, 50, 30 and below.
As I said, a reasonable base case is that these are one-time
MSCR 400 backtest
one-time
here,
price
balanced area.
effects. Of course, in the end, there will not be. This will not turn out to be inflation because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do too unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish
FCX slapped at the initial low of day, turning over here, 39.10 target.
Need to do to keep inflation under control. Ideally, we do it efficiently.
39.10 target here, taking some profit. Big crack on FCX.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add
nice trade there,
stimulus to the economy in 2026?
Thanks. I actually added size on the 39.50 getting stuffed.
On the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter.
Trail stop at 39.58.
You know, the biggest part of the bill was making permanent existing law on taxes. I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you?
This will break up that.
I want to put this in terms of you and the president. So let me ask
Yep,
it this way.
accelerating now. We got 60.50 below, guys. SPX.
About the cost to the government.
Expect volatility. Negative gamma here. Light negative gamma.
In terms of interest rate
Can whipsaw.
charges.
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that. And it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria. Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good.
Guys, I just got filled 6390 calls SPX actually.
Project that they've raised
a lot of
that you
play.
see as making you reconsider any aspects of the project?
So
I'll stop out if we break below
project
6400 on
was hatched and
ES.
conceived almost a decade ago now, and we went through the very long process of clearing it through historic
Smaller play,
preservation,
but
the
good risk
National
reward here, I
Capital
feel.
Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So
That's reaction in nature.
When you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through.
Watching
In
SPX
addition,
yesterday's
now we
lows
have,
here.
3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate, kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. If you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable with BLS can continue
Ganesh, exactly
performing
reaction.
their
Let's
mission
see now.
effectively
Let's
if
see
they
break
take
of
an
high day
8%
for push
reduction
to
in
268.
headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies...
Guys, 30 can come next if this 60
of the fact
fails.
of the tariffs and all the discussion of how they're going to... if the companies will raise prices when and as they can, and you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just go across the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow.
Netflix, pretty big rejection at the hourly EMAs. This is kind of last stop, in my opinion, a spot for it to reject. So something to watch here as the market sells.
Those rates, how do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates. It might be
very high
shorter,
risk, but
it's not the
definitely
overnight
watch
rate.
for reaction. 63.40 or so on ES, anywhere in that 63.35, 63.40. If we see that.
Housing sector, and one of those is just there's a kind of a long-term housing
Sorry,
shortage that
SPX
we haven't built
63.40.
enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? You know, it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down? I think closer to 2.
We'll look at everything. You know, it's as I mentioned. You know, a pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target.
That's in that gamma area, 63.40.
Yep, high risk reward here against like 30, 35.
Of you know, major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
You know, we're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places.
I'm taking this long on ES.
All of that, but we really need the government data. Really is the gold standard in data, and we need it to be, you know, to be good and be able to rely on it. And we're not going to be able to substitute for that, but you know, if we have to make
a good reaction so far from that gamma spot.
What we need.
I was watching the 6380 calls, or 70 calls, sorry. The premiums are okay. Let's see if it holds any second dip and turns. Looks like a really nice risk reward spot. Nice catch.
Concerned the way that conduct might impact the Fed's independence
Yeah,
going forward.
it may be much different with premiums, but for ES, easily able to get in and out.
Yeah.
Now we'll see if it holds.
It should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course.
Putting a small auto on here, SPX 6370 calls.
Interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And
keep an eye on VIX here. VIX is at +1 ATR, so if that can reject, that can play favorable to calls to the upside for a scalp.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing, but so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate.
That gamma position did move down just a little bit more, like SPX 6332 for reference.
The GDP data that we got this week.
Lines up right with that 31 level that we were talking about.
It's difficult to interpret because you have these massive swings in net exports, which may
25 is your -1 as well, Mate.
Affected by kind of consumer spending as well. Look, it's one of the data points that we pay
and that's
most careful attention to.
6325 for SPX.
And there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this dissent, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you.
Charter 270 puts up about 40% from the entry on the back test today, looking good.
What was the case against that at the meeting?
Sure. So we have an economic go around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy was the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express, I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock, and it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, and one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal, so that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and
Speaking a little more on that ES long, down to just runners now.
In the next cycle, it is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic
Q&A is going well.
That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is
FCX got 1 cent from my
is the
trail
best
stop.
data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation because you're being pulled in two directions, and you have to decide which of those it took to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No,
Guys, all out SPX 6370 calls, 250 about 50%.
And it can go in many different directions. The inflation data and
I think they can move more and just a little scalp.
Employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
All right, Powell is done, guys. Powell is done. Guys, I'm adding to my Tesla calls, the swing trade. I'm adding to the 350 August 15th calls. Stop 300. Space Monkey, just quick mic check. Want to make sure I can hear you.
Yeah, I'm here.
Okay, just making sure. Thanks.
Check out Lulu. I don't know if you have, but that test this.
Oh wow.
This week, yeah.
Oof.
The 220 really paid. Yep.
Yeah. Jeez. Just one time framing lower. Still. Yeah, nice call out. All right, good sell on SPX there. Future's definitely easier today. It's just a little slow. We might need to extend down to 31 to 25, that area first. All right, just quick update. S&P bit slow, choppy near the lows. Netflix holding up strong today. UNH holding up. Nice divergence from the market throughout that volatility. FCX, I'm actually still in trails. Literally got 1 cent from my trail stop. I put it at 14. It got to 13 on this spot. Outside of that, not a whole lot looks interesting, honestly. NVIDIA, Simi's holding up nicely. Obviously, big earnings after the bell. We've got Meta, Microsoft, Robinhood, LRCX, QCOM, ARM, Carvana. See what the market does on that. And then we also have some data tomorrow. We have PCE data in the morning, jobless claims, and Chicago PMI at 9:45, 15 minutes after the open. Wow. FCX, man. 2 cents from the stop at the time. Just doesn't want to trail out. All right, while we watch the market into the close here, about 40 minutes to the close. If anyone has questions out there, drop them in the chat or any chart requests, let us know. Just observing things here, watching the market. Not looking to do too much before the close. SPX looks like it wants to test the 63.31 25 spot. Let's see if we get there. No trades, hands off for me. Somebody asking about Google in the chat. Let's take a look here. Google's really all about 197, 198 to me, upside. I think with the earnings after the bell, it's a little bit tricky. It'll likely move on Microsoft Meta earnings, but it's been holding up well. Some nice relative strength. It's been a harder name to trade, but I'd be watching at 198 for a quick move, at least to 200, a magnet type move. I think that's a day trade. If it sets up, it gives an opportunity. Otherwise, it's kind of hands off in the range. Not the easiest price action today. Had a nice rip off the open, then gave it all back, and then recovered the whole thing, and then some. A little bit trickier. Say out of the mega caps, it's showing some more promise than others. FCX still hanging in there for me on runners. That was a quick breaking news trade. If you're joining, we can, while we're just sitting here, quickly review that. So FCX had very important news. So that's one thing with breaking news trades. being able to interpret the significance of news is a very key component of whether or not you'll get follow through or not. Excuse me. So we had the headline: Trump signs proclamation imposing universal 50% tariffs on imports of semi-finished copper products and copper-intensive derivative products effective August 1st. So FCX is a copper play. We have this, big break on the headline, and then what was very interesting is the 200-day. Space Monkey called out was sitting. Let me just pull up the daily here. Was sitting right at this, I believe it's 39.50 or 40.50, sorry, 40.53 spot. So a lot of times, there's like a tendency to want to avoid chasing for good reason on certain trades, but when there's confluence with the higher time frame, it can still create really good opportunities. And on this one, what I was basically looking at, so I saw this late, I saw this around this spot here in the trade. And the best, if you study the best breaking news trades, the 2-minute candles, so 2 bar, won't trail out for a while, and it will be a good indication of whether or not it'll continue to get follow through. Headlines that get trapped or just aren't as significant likely don't respect that, and they'll pop higher and kind of get caught up in the range. So when I saw this, see this big move down on the headline and started to kind of wick higher, this next bar is where I started to see this. It respected the prior, and then we started kind of curl lower, which is where I began to initiate some shorts. I knew that this 40.53 was a 200-day, so I was also watching that very closely to get a reaction, which we did, and still respected the momentum lower. Once we got through, was able to take some partials into this, and then there was an opportunity here to actually get more size. And by the way, this is a trade strictly for shares. Options weren't very good. Hard to attack this with options, in my opinion. But with shares, this is something that you can do, especially if you have keys and everything to be kind of fast, quick. But this retest of the 200-day, this was a moment in the trade where I was able to get more size. So for me, it's like very simple if-thens in a momentum trade like this. So already getting a little bit of profit from this spike down. Once we retested this spot, once it got a reaction, it was very simple. Okay, if this holds below the 200-day, then it can continue, and you just follow the character of the trade, which is the 2-bar trails. So that worked well. Was able to get some exits out into that, and then this 2-bar got me trailed out entirely here. So it's a good example of not every trade is perfect. We popped back up into the 200-day, and I had my stops up into this at this spot, and we only broke it by about 9 cents, 8-9 cents, which got me out. But once it stuffed very quickly, I went ahead and got back in, risking profits with a stop right above, because I'm basically saying, okay, this was a quick fake out, and if it is real and continues, it has more to go, which was the case here. So That got stuffed and then created this nice kind of washout where I was able to cover most into low of day. And then I am still in some of the position that almost got trailed out. And the trail's at 39.14. And I'm just kind of observing it here. So let me know if you guys have questions about that. Scalps are not something I do a lot, but when there's a heavily in play name or breaking news, with shares in particular, it's a nice business, I would say, to create some cash flow. Somebody calling out the copper futures down 20% in 1 minute. Wow. Let's see if I can pull that up. How do you pull it up in Oh, okay. That was easy. Wow, yeah. Huge move. Let's see, if it's 250, there was also this. Okay, so there's actually one more opportunity to get size. So something I'm working on is pyramiding my size, trying to get max size and the strongest ops, risking break even or giving back profits, but what you're looking to gain is exponential profit. So there was another moment. So we talked about that 200-day back test. There was another setup that set up within this where we kind of puked these lows and quickly recovered and then came back lower and retested the prior day lows. So on this, it was very quick, but when you see something like this line up, you can attack it pretty fast. So once I saw this wick off of the prior intraday low, 39.58, I actually slammed more size on this candle in a way that brought my average entry up just above this spot. I think it was 39.64 at the time. So like just above this area. So the shorts were added pretty much at the top of this bar. I'm just looking at my execution. It's like right here, like 39.40. So you're only risking a little bit, but you can do quick math, or if you can program keys to kind of calculate this for you, slamming more size where you're not really introducing more risk because you're either trailing break even on the day or just break even on that average position by bringing your trail stop down. And then obviously if it works like this, then you maximize profit. So this, I was initially starting with smaller size on the initial trades, and this ended up 3xing the initial profit just by kind of looking for spots to add and pyramid into the trade. So nice example there. I can try to get my execution on this window. I don't know how to do that. Let me see if I can take a picture of it. Yeah, I could do it like this. Hold on one sec. I could probably put it right here, actually. Hold on. There we go. Oh, I actually, my order did get filled, the trail, literally to the cent. They grabbed me right before it puked to the lows. All right, I gotta step away for just a sec. I'll be right back. All right, yeah, I guess the joke's on me. I thought that Phil missed by a cent, and I actually got caught, trailed out right here. So FCX running the lows now. This one might close on low of day. Not gonna chase it. That was a nice trade. Wow.
Hey, Matei, can you go into like how you approach managing risk? Around we have some more binary events, earnings coming up for any smaller account holders, or kind of how we've been stuck in this range for a little bit of some things and some strategies that you might employ while waiting for a direction.
Yeah, I think for me it's pretty straightforward. When you know, I prefer to be tactical. Like we talked about this on Sunday. Wow, FCX is really puking the lows here. Dang. Getting a really big acceleration here on FCX. Anyway, yeah, I think it depends on the trader. So if you're a fairly active trader, which is what a lot of us are. For me, I think staying tactical is a good idea. What I mean by that is there's so many opportunities that set up, particularly intraday, that you don't really have to carry much risk. If you're swing trading some positions months out or whatever, obviously make sure size is in check and all of that. But near term, like multi-day holds for shorter strikes or shorter expirations is harder in this environment for obvious reasons with binary events. So I think it's easy to put pressure on yourself as a trader to want to catch those, like every move that happens. Microsoft and Meta are likely going to move a lot, and people feel like they've got to be positioned for everything that happens, when in reality you really don't, because there's so much that sets up that if you just kind of hang out and wait, you're going to likely catch some good opportunities. So things like even Charter, right? Like Charter's a name I've talked about a lot this week. So I've maybe traded twice in my life, but it set up an incredible opportunity that you didn't have to be positioned for. So like with all these earnings coming out and economic data, it's really a trader's market because there's a higher frequency of opportunities. So you don't need to catch the multi-day moves as much because there's more individual opportunity. And then obviously when you get outside of earnings season, that can often dissipate a little bit, and then catching some of those multi-day bigger picture ideas is where the money is made. So right now, I think like the encouragement that I would give people is sitting on cash. Cash is a position outside of swings or anything that you've already calculated the risk for, and just wait for your pitch, so to speak. Wait for setups to form that makes sense to you. And then if you're not an active trader, I think you just go to the beach or go kind of chill and just let the dust settle, and then see what opportunities are there. The markets have been really hot, not really seen much follow through to the downside. A lot of people are very welcoming of a few percent pullback. So if you start to get pullbacks into some spots that you like, you can pick your spots, but I wouldn't be in a rush to do so. It's better to be a little bit late and right than early and wrong. So I think just for those people, like more medium term traders, there's nothing wrong with being more hands off and just let things set up.
Say we do start to pull back a little bit, Matei. Like, what are some areas you're going to be looking for reactions? Some bigger spots on S&P and SPX.
Yeah, good question. Let's take a look. Actually, off the top of my head, 62.87 I think is a spot. Let me pull back a little bit here. Yeah, so like this 62.90, like I think we can pull, if we were to pull back in like the 62.80, 62.90 area, that would be like fairly solid. You'd want to see that hold though. If you start to lose 90, 62.90, then I think a bigger correction back to like 6,200, a bit of a snapback is more likely. But you know, if we hold, I mean, it's still very early. There's a lot to come yet. We have huge earnings and economic data this week where, you know, right now the 63.31 spot is like, in my view, keeping this alive to some degree. If you see like strong beats and a positive reaction to data, you could see this kind of quick snapback to the highs. I would rather not see that. I think that'll make, you know, topping and then, you know, near term, I will say, a little bit trickier because there's going to be a fight between chasers and all that. But we'll see. I think if it starts to really pull, that 62.90 is a big spot that I'd be watching, give or take 10, 15 points. And then, you know, that would maintain like a fairly healthy view. It's just, you know, back testing 921 EMAs. If that were to get lost, I think a bigger correction into 6,200, 6,150 would be what sets up before we, you know, begin to find some more meaningful support, which, you know, I've been looking at that like 2 to 3% like healthy pullback spot. 3% would put us right to that 6,200. About 2% is at 62.80, 62.90 spot. So that lines up with what I'm thinking here.
Thank you, man.
Is there... All right, I got to clean up this FCX chart. It's freaking me out. All right, if anyone has questions, feel free to hit the chat. I'm just going to be on mute for a few minutes here. Question from the chat on Charter. How to watch the position in Charter for more downside? Is there much risk reward here? It's a great question. So I added back some exposure to Charter. This is obviously a really big trade since last week, but we got involved this week on the 307 break. The way I see Charter is this is like a what I would say is like a broken chart in many ways. And anytime that's the case, when you have this significant of a breakdown, it'll often lead to a sometimes multi-month, but at least multi-week downtrend. So I don't think that would be, you know, without some bounces, things don't go just straight in a straight line. That being said, this current leg of the trade, the way I view it is very simple in terms of trails. So I just watch the prior daily bars. So just like we were talking about 2-bar trail on the lower time frame for, you know, like scalping, the higher time frame, once this is established, this type of price action, I just like to look at the prior daily bars. So I got back involved once we, you know, kind of popped back into 287 here. So risk reward, it's you know, it's still good in my opinion as long as we're holding below daily bars. And then today's daily bar, is going to be right at that 287 key level. So risk reward is actually fairly good because if this, sometimes you'll get like a kind of pause or rest day like this, and if it's weak enough, you can often see like a big gap lower or something like that. So in my view, I just want to stay involved until there's a reason not to be involved, and that reason, at least on this leg of the trade, is the prior daily bars, which was at 297 to start the day, roughly, and now after today's candle closes, it'll be 287. We added, there was a very good add today at that rejection. The reason for that rejection, for what it's worth, while we're on the topic, is the EMAs. So I like to look at like the 30 and the hourly EMAs on multi-day trend days or moves, some big like catalysts that are in play. So with this, you saw this was like the first kind of bounce. We really have just been pushing lower. This was a nice like reversal candle, and then we kind of just pushed higher. And what I paired this with, so like this is what the EMAs look like. You kind of came back into the averages, not even really a huge back test. Like this could push back up to like 292 and reject to be even, possibly even better. But that was part one, and then the second part of this decision to add a core back in was the RSI. So when you look at the RSI, check this out. So on this back test near to 287, didn't quite get there, but close enough. The RSI got as bearish as it's been since I believe since the entire catalyst. Yeah, so since this started the gap from 380s, this is the most bearish the RSI's got on the 30-minute. So think about that. So you're essentially at 287. Don't have to draw a line. That's 100 points. You're 100 points lower, and the 30-minute RSI is more bearish than it was 100 points higher than it is right now. So that's a pretty significant, divergence for the stock. So that paired with a little bit of a back to EMAs makes me want to stay involved. So in terms of risk reward, I'd say it's not bad against the prior daily bars. It's actually quite good, even though it's already dropped this much. Don't underestimate how much lower something can go. So yeah, those are some thoughts on Charter. And then, of course, if it starts to trail out or pop over that spot, you can just get flat. And I will add, with all that being said, the sizing is, I'm using like roll-up sizing, so a portion of profits to kind of keep a core, stay involved. I've just seen, too many of these. UNH is an example, right? You look at the daily on UNH, you had this big crackdown, and then just one time frame's lower from April to May for a whole month, and then gets another big gap down. And then, so what is that? I don't know what my mic was just picking up, but anyways, so we got another gap down. So this just kind of kept going, right? This is that gap I was talking about. So like on Charter right now, it's like with 3 down days in a row, and then a pause day today, and then you just kind of one time frame lower, and then it got even more capitulatory. So I'm not saying that Charter does that, but anything's possible, right? So people trying to time bottom can get washed up pretty bad. Lulu, another example of this, right? So you look at the daily chart on Lulu, big gap down. If I could draw, there we go. A couple days lower, pause day, and then big continuation. Daily bars did trail here, and then it kind of put in a small bounce, and then it's actually still going lower. So multi-week trend, multi-month trend now present on that. And there's plenty of other examples, but my goal has been to try and do a better job of sticking with these setups longer and maintaining a core, even if it's with a little bit smaller size or roll-up type sizing. As I'm trying to train myself to stick with it a little bit longer than I typically do. So. Just watching the market here, everybody. We've got about 5 minutes to go. UNH, nice close set up here. Defended 264 really well and dips throughout the whole market pullback. We'll see. I have not been the greatest at timing swings on this thing, but it's pretty compelling today. So let's see if this can mark a low and start a swing high. SCX, awesome quick day trade, unexpected there. Let's see, SPX was decent scalp. Yeah, not a whole lot else really. That add on Tesla looking really good, so I added to a swing today on that. It's more of a big picture idea. This is essentially just want to see 300 hold. It's in a weekly wedge. So while it's in the wedge, it's definitely harder for day trades, but for swing trades and whatnot, you can kind of pick your spots for the idea. Market holding the dip quite well, so we got as low as 36. 31 was a key level. 35 was that gamma spot. So far, market doing what it needs to on dips. Like we talked about, this is still a lot. Like the upside still remains alive. Big picture on this wave above 31. So if we start to lose 31 or the earnings are bad or reports are bad, that turns into something a little bit different. I thought I would be targeting like 62.90 in that case. But if we continue to hold like this and earnings are good and the data is good, don't be surprised if this check back doesn't get bought up quickly like we've seen just about every other dip. And it could definitely create a bit of a chase higher. I have a 64.50 extension to the upside, so I'd be curious to see, if this pullback gets kind of absorbed and we get bought up into 64.50 and then see a bit of a sort of a pullback again. I don't try to guess when things are going to happen, but it's good to kind of think through different scenarios because they often play out similarly to the past. So one session at a time, though. Overall trends are holding up okay as we get into the close. I'll hang out for a little bit into the close and see if what these numbers look like from Microsoft and Meta. I'll have the daily market recap I'll be working on. So if anyone has questions or wants to hang out for a little bit, just drop it in the chat. I'll be here. I'm just going to eat a little bit of food here and be on mute. All right, pencils down, everybody. Let's see what the futures, or not futures, I can't even think straight. Microsoft and Meta do. First reaction higher on Microsoft. Pretty big pop. Looks like QCOM's out. QCOM moving lower, Microsoft moving higher. Big pop on Microsoft. Let's see if it holds. So about 5%. Let's see if we can get the headlines here. Hearing chat sounds, but I don't see the chat, so sorry if I'm missing your message. Not sure what's up with that. Big move here, pushing higher on Microsoft.
It's usually a good sign when the green candle goes off my screen, and I had to adjust to be able to see.
Love it. All right, so Microsoft had about a 3.5% implied move, according to what I'm seeing. We're up 6%. This is that potential blow off top I've been talking about on Microsoft. And that doesn't mean I'm bearish, but it was just so grindy.
There's
It needed
Meta's
a pop.
reaction.
Oh, thank you. All right, Meta popping as well. All right. See if we can get some numbers on Meta. All right, Meta EPS 714, estimated 589, revenue 47.5 billion, estimated 44.83 billion. It's a pretty nice beat. Pretty nice. All right. What was implied for Meta? Meta was implied about 5.5%. We are flying here, 6.5% on Meta. What did I say? Implied move was about 5% roughly. All right, so big beats from the big guys. S&P, what is S&P doing here? Back up to 6,400. SPX,
Yep.
that is.
Back up to today's high.
Yep.
That's a big deal. And just failed breakdown of today's low, yesterday's low.
Yep. Yeah, it's that scenario we were talking about, right? It's like if you hold 31, this wave is still alive if we beat. And it wouldn't be surprising to see us just run right back up to the highs, create a bit of a chase. 6450 is in the cards early.
63.35 and then 63.15. Both of those, weekly pivots coming into this week. Those were weekly pivots. The ES version of them, any of those could have held on the back test for a higher low and then gone back to all-time highs. So if you have these positive tech earnings and we held that, now we have a failed breakdown of today's low and prior day low, positive tech earnings. It be hard to sell off after those. We'll see what the guidance is and everything on once the calls are over, but a corrective dip might be over.
That generational 30-minute dip that we had.
Hope you guys loaded up your 401k.
The low is in for the year.
That was a 1% generational dip.
I don't even know what that means, but all right. I feel like caffeine is not working out, not enough this week so far. It's only Wednesday. It feels like next Friday. Oh, man. Just getting started. What's crazy is we've had, like, going into this week, it was like, knew that the back half of the week would be very good. But the front half of the week was like those unusual ops that turned into some big trades like Charter. I just don't expect to see that happen. We have FCX today, like on the fly. There's been some really good opportunity, just given all the earnings that have been coming out. BE today was really good. I didn't trade that, but BE was good. I feel like I'm missing one. UPS was really good today. Didn't trade that either. It's like the playoffs. Earnings are like the playoffs, at least for my playbook. And we have UNH today. So on a more serious note, it's important to keep mental capital in check. More frequency of trades, more to do can lead to decision fatigue faster. So make sure you guys are getting some rest and charged up. We got a busy end of the week ahead. NVIDIA liking this, guys. NVIDIA 181 after hours here.
Good. Need NVIDIA to hold on for a few more days. Just heads up, August 5th, there's going to be a huge seller on the tape.
Okay. What don't I know here?
August 5th is my I can sell for long-term gains.
Oh, okay. Nice.
Huge seller.
Yeah. Yeah. So NVIDIA is going to 200.
It's the 1 year of the yen carry unwind where we capitulated and it hit 92 for a brief period.
If I'm not mistaken, isn't that not entirely unwound yet? Isn't that like wasn't only part of it? Um, is there like isn't that happening again
Yeah,
this year?
I don't know all the details. I didn't follow the very end of that, but that does sound correct to me.
One sec, I gotta do something here real quick.
Meta up 10% now.
Wow, what a move!
Almost 7 for Microsoft after the ridiculous run that it's been on. Look at that Microsoft chart.
It's insane. All right, I'm gonna start working on this daily market recap here. Now that these moves, we still have the guidance and all of that, the conference calls that is. But with a move like this, bigger than what was implied, it's kind of I would say unlikely that this, doesn't at least hold up. But we'll see where it's at in the morning. We still have Robinhood. Let's see what other earnings do we have. Robinhood, Carvana up on earnings. I can't see this. It's too small to see. Just pull it up here. There we go. All right. Let's see. APLD. Up on earnings. LRCX, have they reported yet? Looks like they're up. I know QCOM was down. Ford. ARM. Alright, so ARM down, LRCX up. Still waiting on Hood. All right, everybody. I'm going to hop off the stream here. Thanks for tuning in if you guys hung out with us for a bit. We got Microsoft Meta up on earnings. Still have Hood to come out a little bit later. Overall, good session. Nice navigation through FOMC. Let's see how